Good morning, you're watching All You Need to Know on Bloomberg Quint Live. I am Jayesh Khilnani and alongside me is Agam Vakil to take us through the derivative space. But first, let's have a look at the handover from the West. The US market, those closed positive. In fact, the Dow Jones surged more than 1% and closed above the 25,000 mark for the first time since March this year. And we had the European indices, which also closed mixed. However, if you look at the Asian screen, the handover has not played out to the script, with the Japanese 225, Nikkei 225 actually trading flat with a negative bias. Also remember that the Hong Kong market and the Kospi are shut on account of market holidays. So what's the SGX Nifty actually suggesting? A mild downtake of about 25 odd points and a start which will be close to the 10,516 mark for the Nifty itself. Now looking at some of the areas that traded, we had a mixed close for most of them, where we had Vedanta, Tata Motors, HDFC Bank and Dr. Reddy's, which closed more than 1% down, and we had Wipro also, which declined 1%. As far as gainers are concerned, we had ICICI Bank and Infosys, which managed to gain for themselves. Looking at the commodity cues, well, oil prices are currently trading with a positive bias. So WTI and Brent both up about 0.2 to 0.3%. Remember that this is on the back of a 1% rally for oil prices that we saw overnight. As far as base metals are concerned, we had a mixed close for most of the base metals. The index itself, however, surged, and we had lead, which was the top gainer. That surged about 3.5%, with support coming in from aluminium, copper and zinc prices, which also closed positive. Now, if you look at the Shanghai screen, Shanghai steel prices have opened on a soft note, downtick of about 1%. But other than that, no major cues coming in from the Shanghai Futures Exchange. Gold prices also under pressure, still trading below the $1,300 for an ounce mark. Now, if you look at the fund flow picture, the broader trend continues. FIs sold for nearly 500 crores yesterday, while the domestic institutions pumped in nearly 1,200 crores. For the month itself, FIs have sold more than 4,000 crores, while the DIs have bought more than 8,500 crores. As far as individual indices or the key indices are concerned, we had a lot of red screen over there. If we can have a look at that one. So the Nifty 50 actually closed about 0.75% in the red, with the mid cap index falling more than 1.5%, and the small cap index in fact fell 2.5%. Now, as far as the gainers and losers on the indices are concerned, we had the Nifty PSU Bank Index, which surged about 2.7%, and the Nifty IoT Index also managed to close in the green. As far as losers are concerned, Nifty Realty, Pharma and the Auto Index, all three of them declined more than 2% each. And with that, the India VIX also surged about 1.8%. This is the second straight day that we have seen a rise in this particular index. Lastly, but the contribution, so we had TCS, SBI and ICICI Bank, BPCL, which actually batted for the bulls, while we had HDFC Twins, Kotak Mahindra Bank and Sun Pharma, which contributed to the losers. But Agam, what can we expect from the futures and options market today?
Well, Jayesh, we've seen a lot of weakness in cues coming in from the futures space, especially given we've seen a decline around 3.5% in the Nifty Futures. The Bank Nifty Futures have actually seen accumulation towards fresh shorts. That leaves us with the India Volatility Index, which continues to edge up higher, now closing to the mark of 14.5. And what we've also seen is, in terms of the Nifty put call ratio, that has also come off quite substantially to around below the mark of 1.3. In terms of changes in open interest, what we are seeing is most activity around the 10,600 mark, more writing in the 10,600 call, unwinding in the 10,600 put. What we're also looking at is changes in JPS Associates, which moves out of the F&O band. And don't forget, we're also keeping an eye on something like Jubilant Foodworks, which continues to see fresh longs, as well as fresh shorts for something like a Strides Shasun, which continues to decline, another 12% gone on the underlying. So we'll have to wait and watch about to whether or not there is some recovery. But now let's go across to Paul Allen for all the top international headlines.
Secretary of State Mike Pompeo has told Iran to halt uranium enhancements and give independent inspectors access to the entire country or face the toughest US sanctions in history. He gave a list of 12 so-called basic requirements that Tehran must meet if it's to avoid punishment. Pompeo was making his first address as Secretary of State following President Trump's decision to abandon the 2015 Iran deal. The US is ramping up pressure on Venezuela following an election decried as a sham. Washington's banning purchases of debt owed to the government, including to state-run oil company PDVSA. Trading in Venezuelan debt ground to a halt on Monday as investors digested the order. The US has already said sanctions on its all-important oil industry are under active review. Italy's borrowing costs are surging as populist parties attempt to form a government. The nation is being punished in the bond market, with the incoming League Five-Star administration seemingly prepared to boost spending without regard for EU rules. That means a note maturing in February 2028 now yields 10 basis points more than a euro-denominated sovereign from Indonesia due 4 months later. Democracy protesters in Thailand plan to march to Government House later on Tuesday on the 4th anniversary of the military coup. It's seen as the most direct challenge yet to the ruling junta, which has repeatedly promised elections but remains in power. Thailand's economic growth hit a 5-year high last quarter, beating all estimates as food output added to gains from exports and private consumption. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Well, shifting focus to the commodities market, starting off with oil prices, which are currently trading with a positive bias. Remember that this is on the back of a 1% rally that we saw overnight for WTI. In fact, what we understand is that commodities are likely to be boosted on account of the easing China trade war concerns that we have been witnessing. And also a Bloomberg survey indicates that the Cushing crude oil inventory level that is likely to decline as much as 2.5 lakh barrels for last week. As far as base metals are concerned, the index itself on London Metal Exchange closed positive. However, there was mixed trading for individual base metals. Lead, which was a top gainer, that surged about 3.4% on account of an environmental crackdown, which actually boosted sales. Now, we also understand that as per IAI, the global aluminium production has increased 1.1% in the month of April. Also, copper market is, was in surplus to the tune of about 86,000 tons in the month of Feb. That is as per ICSG. Now, if you look at the Shanghai Futures Exchange, the base metals are in fact trading with a mixed bias, but slightly on the negative side with China steel, in fact trading more than 1% lower. Gold, however, is still struggling below the 1,300 an ounce mark, and we understand that the long positions in gold prices have been reduced to the lowest level in about 2 years.
Well, amongst the stocks that we are tracking includes Tata Power. Now, Tata Sons subsidiary Panaton will buy 4.7% stake in Tata Communications from Tata Power, and that will be at a price of 612 per share. So you'll have approximately 800 crores that will flow into Tata Power. So watch out for that name. That apart, you have Infibeam, which has said that they will consider a fundraising proposal on 30th May. Watch out for that name. Also, a couple of earnings that we will be tracking in the stock will be reacting to. Very strong set of numbers coming in from Navkar Corporation. Revenue growth of 16%, net profit growth of 33%, and you've also seen a 600 to 700 basis points expansion in the EBITDA margins. Action Construction, again 60% revenue growth. A profit has jumped 11 times or 11-fold, and margins have also expanded from 4% to 10%. So strong numbers. Motilal Oswal, revenue growth of 43%, net profit growth of 64%. Global Spirit, again a good set of numbers, because while you did see a revenue remaining more or less unchanged for the quarter, a marginal uptick of 10%. The net profit fell by about 50%, but that is only on account of an exceptional, you had you had a tax credit in the base quarter, and that's how the numbers look. Nevertheless, it was a mixed quarter for DLF. Revenue fell by 38%, but the net profit jumped by 66%. But that was only on account of about 200 crores coming in from its joint venture. That's the reason for DLF, but a mixed quarter. Margins, of course, a loss of 1%, so they have seen a EBITDA loss. Future retail, again, a mixture because we did see a marginal uptick in the revenues. Margins expanded by about 40 basis points, but we did see a net loss of 464 crores as compared to a profit in the previous quarter. That's because there was an exceptional loss of 604 during the quarter. So let's see how that reacts. But they also said that they will buy the retail business of Food World for 41 crores. And additionally, there's a report, ET report, which says that Bharti Group firm Cedar is looking to exit future retail, and they're in talks with Premji Invest. So let's see how that one reacts. And yet another future group company will remain in focus. We're talking about Future Lifestyle Fashions. In a bulk deal yesterday, Bennett Coleman and company bought 1.8% stake, and then you also had another buyer, Spectacular Investments, which bought 8.2% stake. So watch out for all these names.
Okay, the big Fortis EGM is today. What is expected? So basically, it's been called by two of the funds that own close to 12.04% stake in the company, and it's at 10 a.m. today. So it's Eastbridge Capital as well as Jupiter India Fund that have called for this EGM today. Now, basically, what's the agenda? Basically, what they want to do is remove four of the directors. So out of these four, three of them have already resigned ahead of the EGM, and they were supposed to be, the EGM was for removal of them. Brian Tempest is the only board member that will continue, and the EGM will focus on his asking shareholders to vote for the removal of Brian Tempest. There are three additional directors that these two funds have recommended. So these are the three individuals which shareholders will be able to vote whether they want them on the board or no. How is this important? Given the fact that when the deal happened, the Hero Burman deal happened, 5 of the members of the 8 voted in favor of Hero Munjal. 3 of them were against them. Now, 3 of the ones who favored the deal were the people who resigned, and 1 of them may be removed, and that is Brian Tempest. So the old board actually went ahead with the Hero Burman deal. Now, basically, what has happened is that post the deal and them being selected, Manipal has upped the stake, while IHH has extended the timeline of the deal from May 15 to May 29. So that is what already has happened post the EGM. Now, what's on offer currently? Right now, Manipal changed their price to 180 per share, which is the highest. What has been selected currently is the Munjal Burman deal, which includes immediate infusion of almost 1,050 crores. Now, what has exactly happened? So these are the 3 major bids that have come in for Fortis at this point of time. Now, basically, as far as SRL is concerned, what does it mean? The Munjal Burman has said that they want to divest SRL. IHH has said there's no comment, and Manipal will buy in the stake and merge it at a later stage. That's what the deal is there with SRL. Now, going ahead, why was what went in favor of the Munjal Burman offer? First of all, there was an immediate fund infusion to ease liquidity. That was something that worked in favor of them. Secondly, there was limited dilution of shareholding, and a new promoter will come in. That is considered positive. Definite plan with respect to SRL, what they plan to do. There is more promoter participation. There's change in promoters without any kind of disruption, and there is shareholder participation because of the rights issue. Now, what could go against them, and why is this EGM important? Firstly, IHL lost only on asking for due diligence, according to Nomura report that came out post the deal being announced. Secondly, what also does not go in favor is there is no prior experience in running a large hospital chain like Fortis they would have to run. And finally, the large shareholders may oppose the new directors that is there. So this EGM is important given the fact that the new directors had opposed him. Whoever had favored the deal with Hero Burman, they are out of the company. Only Brian Tempest and 1 more director remains. So it will be interesting to see if it goes according to plan of the 2 large shareholders. There probably could be a change of management in Fortis. Probably IHH or Manipal may also be considered going ahead for Fortis.
Before putting petroleum into GST, it's best that GST stabilizes. Then go. Now, for the time being, the best option would be for the center to roll back the tax. At least calibrate the tax downwards so that increase in the crude petroleum price do not result in an increase in the petrol and diesel prices. Because they were raising the excise duty, not just excise duty, additional excise duty, so that the additional money they get is not shared with the states. They were increasing the excise duty so that the decline in the crude oil prices is not transferred to the consumers through lower prices. They were calibrating the excise rate upwards so as to mop up the entire benefit of falling crude oil prices. Now they can do the reverse and the prices will become stable. I do not know why they refuse to do that. Now, Karnataka election has just shown us for 3 weeks the prices did not rise. So don't put the blame on the market and the oil marketing companies. The public sector companies and government can order them to do. We have just seen it being done. Either it can go that way and allow the marketing companies to have a income and suffer losses which government can compensate, or they can calibrate their excess duty downwards so that the increase in the crude oil price does not get reflected in the petrol price.
State Bank of India, India's largest lender, is expected to report a net loss of 1,728 crores for the fourth quarter. If that does happen, it will be a second consecutive quarter of the bank reporting a net loss. Remember, in the third quarter, SBI had posted its first quarterly loss, at least in 17 years, of about 2,400 crores. What could possibly weigh on these analyst estimates for a net loss range from 485 crores to about 4,200 crores. And do remember that the year-on-year numbers are not comparable, given that the bank started reporting numbers of the combined or the merged entity, that is with its associate banks, only from the 1st of April. So this quarter year-on-year numbers will not be comparable when you actually see SBI's press release. What could weigh on SBI's numbers and lead to a net loss? Firstly, loan growth is expected to remain muted below industry average. We are seeing a 4 to 5% sort of a sequential growth. Again, we are doing a sequential comparison. Slippages are expected to come in at anywhere between 19,000 crores to 25,000 crores. In the third quarter, they were at close to 25,000 crores. And in an interview to Bloomberg Quint, the SBI chairman Rajneesh Kumar had said that the fourth quarter slippages should be lower than the third quarter ones, and that the FY19 gross slippage number as well will be capped at 2%. So let's see if that happens. Gross NPAs are expected to come in at anywhere between 10.6% to 11.5%, and this is as compared to 10.3% number that we had seen in the December ended quarter. So overall, we'll be watching out for the kind of slippages that come from the power sector, because that is an area that the bank itself has highlighted as stress. The management did say that they are expecting slippages to come from about 4 to 5 power accounts in this quarter. We'll also be watching the extent of utilization of RBI's dispensations with respect to previous various provisionings. Remember, in the third quarter, SBI did have a big M2M loss provisioning, and they could choose to write that back. So let's see how much of utilizations they use. Any comments on asset quality for FY19 and comments with respect to RBI resolution will be important to watch, especially with a recovery rate of about 75% that we have seen for Bhushan Steel. So that's all that we are going to be watching out for from SBI, but expected to report a net loss. But that said, Darshan, what's expected from Dr. Reddy's?
Yeah, so two numbers will come out today, Dr. Reddy's and Cipla. Let's start with Cipla, because what's happening is Cipla had a favorable base last time around, and that is why the numbers will look better this time around. On the top line, we are seeing a growth of 12% that will come in. The company will report a profit of almost 438 crores versus a loss of 62 crores last time around. Remember, a lot of one-offs were there last year. That is why this loss was there. On the EBITDA front, we are seeing a 64% jump on the EBITDA, which will mean margins of almost 20.7% versus 14.1%. And gradually from 14.1% over the last 3 quarters, they're managing to inch it up to close to 20.3%, 20.9% in the last quarter, and similar number is expected this time around also. A lot of one-offs came in last time around. That is why the numbers were impacted. Basically, pricing pressure will continue. Competition will continue in the US. A soft quarter as far as the India market is concerned. It's seasonally weak for them, but they've launched a couple of new products. Polmicort has been doing well for them in the 4th quarter. That will impact the numbers positively for Cipla. The South African business will continue to do well given the fact that the South African rand has managed to appreciate, so that is something that is positive, and R&D costs are expected to be elevated, therefore impacting margin. What works for Cipla is the fact that they don't have significant amount of US presence. They are growing there, and the other markets continue to remain strong. That will not be the case for Dr. Reddy's because they have a substantial US number that has come out. They have substantial US sales that will be there. So overall, we are seeing just a 3% top line growth, 14% bottom line growth, and close to 100 basis point margin expansion. Again, similarly, pricing pressure and competition will continue to be troublesome for them in the US markets. Couple of their key products that they have competition, and that will mean that sequentially also the numbers will look slightly weak of them. US markets will be weak given the fact that no new approval is coming in because of the pending warning letters that are there. But the other markets, Russia is expected to be strong, CIS is expected to be strong. The other emerging markets are expected to be strong this time around. Margins will obviously improve on a weak quarter last time around, but like Lupin, we saw that the US markets are rather weak for them, and that will also be probably reflected in Dr. Reddy's also. But Yatin has more details on what's expected from the oil marketing companies.
As far as oil marketing majors are concerned, IOCL and HPCL will be reporting their numbers. So talking about the IOC preview first, we are expecting a revenue growth of 6% for the quarter. More importantly, this time we are looking at a dent in the profitability and GRM level. So the EBITDA is expected to shrink nearly 27%. Profits also seen down by 28% for IOC to a level of 5,710 crores. GRMs also seen at $8.2 per barrel versus a level of $12.3 per barrel on a year-on-year basis. Of course, this comes on the back of the fluctuation in crude prices that we have seen, and more importantly, the passing of higher fuel prices has not been that great in the 4th quarter, because of which there would be margin pressure for IOC. Similar is the case with HPCL. We are expecting a marginal 2.5% growth on the top line seen at close to 59,000 crores. Net profit seen 10% down for HPCL standalone entity at a level of 1,757 crores. EBITDA also is expected to fall by nearly 7%, and as I was mentioning earlier, the GRMs for most of the oil marketing companies are expected to be weak in the 4th quarter. GRMs for HPCL for the 4th quarter are seen at a level of $7.7 per barrel versus a level of $9.04 per barrel. So that is the kind of impact that we are looking at for HPCL. Of course, the forex related loss is something that would be weighing on the overall profitability for HPCL. And also, as far as the other factors to watch out for, will be the refining throughput that is expected to grow 2 percentage points. As far as the sales are concerned, they are expected to be low by nearly 1.5% to a level of 9.3 million tons. That is the sales volume. And of course, digital discounts and GST will continue to weigh on downstream companies, and probably both IOC and HPCL should see weak earnings for the 4th quarter this time.
Well, the top 3 stocks that you need to watch based on the delivery buying and selling as of yesterday. The first stock that is on your radar, that should be Century Textiles. Now, it ended about 5.5% lower in trade and saw delivery selling of more than 70 crores. The delivery volume, however, more than doubled at nearly 7.5 lakh shares as compared to its 5-day average, and the total volume surged nearly 3 times at about 6.5 lakh shares as compared to its 5-day average. The second stock to watch out for, Ashok Leyland. Now that was down about 9.5% in trade and saw delivery selling of more than 225 crores. The delivery volume surged about 135% at nearly 1.7 crore shares as compared to its 5-day average, and the total volume surged about 150% at nearly 1.7 crore shares, 6.1 crore shares, as compared to its 5-day average. Final stock to watch out for, that would be India Bulls Housing Finance. Now that was down about 3% in trade and saw delivery selling of more than 250 crores. The delivery volume, however, surged about doubled at nearly 23 lakh shares as compared to its 5-day average, and the total volume surged about 75% at nearly 33 lakh shares as compared to its 5-day average.
From rising crude oil prices and petrol and diesel prices hitting their record highs to live markets and, of course, earnings, because 5 Nifty companies are coming out with their results today. There's lots to talk about, and you'll find all of that on the website. You'll also find a few stories. Here's the first one. In its charge sheet in the PNB fraud case, the CBI has alleged that the former Managing Director and Chief Executive Officer of Punjab National Bank, Usha Ananthasubramanian, and some other senior bank officials were aware of the fraudulent dealings with a diamond merchant, Nirav Modi, but kept misleading the RBI. And speaking about banks and bad loans, the Finance Ministry is not seeking any relaxation from the RBI with regard to its prompt corrective action framework, and has instead asked banks to adopt differentiated business strategy and to exit non-core businesses, according to an official. All right, that's all you need to know going into trade today. Up next is Indian Open, and we'll take you through Market Open. Thanks so much for watching. This is Bloomberg Quint.